Hey, what is going on, guys? Welcome back for another episode here on Let It Grow Investing. I am Jeff, and thank you, as always, for stopping by. Man, we've got another roller coaster of a market this week and going forward, right? We still got a lot of unknowns that we need to figure out and really decipher what we want to do from here, right? So, another rocky week, ups and downs, lefts and rights. It's been all over the place. Definitely had some newsworthy things that I wanted to cover, a couple things that I think we all need to know. And yeah, really, where do we go from here? I'm having a little bit of trouble hearing myself, but yeah, I think we're good to go. So hopefully you guys can all hear me pretty decently. All right, first up, CrowdStrike. Let's get right into it. I'm going to go ahead and pull this one up. I'm going to pull it up on E-Trade first, and then I will share my screen. Yeah, we had the market up 0.5%, about 31 points on the S&P, about 0.7% on the NASDAQ, and about 0.5% on the Dow for Friday. So let's go ahead and look at what CrowdStrike is doing. Man, we have watched this one from their big public failure. Then rebounding, from this low 230 level, 200 level back here on August 5th. And then, yeah, we went all the way up to 455. Hey, it was on my birthday, 219. And that was not that long ago to now have dropped about 120 points. So what happened? Well, they had a double beat. All right. Yeah, double beat sounds great. They guided lower. They guided lower on EPS. That was the big thing that brought CrowdStrike down this week. And let me go ahead and share this one instead. So this is from CNBC. We are looking at revenue increase from 25%, $845 million a year earlier. 37 cents per share for the year. Here we go. We got CrowdStrike says they expect earnings, excluding some items. No, I'm not sharing on X. To range between $3.33 and $3.45 per share, falling short of the $4.42 expected. That is a big difference in numbers. That is why we had a 9% sell-off on this news. Company posted $4.24 billion in annual recurring revenue, 23% growth, topped the $4.21 billion estimate from analysts. Going forward, we are expecting revenue between 4.7 and 4.8 billion for the year versus 4.77. So we're in line on revenue. The earnings number was the big miss going forward. So that had to adjust a lot of different numbers. And yeah, we had a lot of things going down. So we're back to Refinitiv. Let's take a look at what they say. Well, we've got a little bit of upside. Now, mind you, this was at 347. And that was about 15.6% of upside. If we go back here real quick, it's at 332 now. So numbers from here are a little bit old, probably a day or so. And yeah, we've got about 15% of upside there. So probably a couple percent more with the drop that we just had. We are looking at these numbers here, right? We're looking at these revenues. I just told you that we're looking for 4.8. This does say 2026. I don't know what their calendar year does, but yeah, we got this 2025 number. So I don't know if we're looking at Q1 or if their calendar year reports at a different time. But that is another 21% of growth by this time next year, I'm going to say, right? So by 2027, we have another 26% above what we're posting for this calendar year. So decent numbers on revenue growth, but the EPS still is missing. So we go down a little bit further. Is this something that we want to buy? Is it fairly priced? Is it on sale? Forward PEs at an 87. That's really rich. Yes, CrowdStrike trades at a really rich premium, right? Their 5-year average is at 85.9. So is it a screaming buy right now on this dip? No, not for me. And, yes, it's cheaper than buying it at 450. But if you're buying at 450, I really got to question why. You got to look at the numbers here, do the homework. Price to sales, is it any better there? We're at a 24.7. 5-year average is an 18. So a 24.7 is really a rich valuation. The 5-year average is higher, but when the S&P is trading at a 2.9, granted, this is in a different industry than what the S&P 500 just compromises or brings it all together, looks at all the numbers and gives you that index average. If you're looking at IT services and consulting, you're looking at a 3.8. So some of these software companies are going to be a little bit more richly valuated, but CrowdStrike is still way off the charts, and even more so right now. So forward PE is high. And this is the other number that bothers me. Why I don't want to buy it right yet. We're at a 3.9 on the forward PEG ratio. So their 5-year average is a 2.8, meaning we are paying more right now for the growth that they are returning over the next 5 years, right? 5-year forecasted growth rate. So it's not on sale. It's cheaper than where it was a month ago, or even less than half a month ago. But it's still not in that point where I'm just ready to pull the trigger. I like this stock. I've been, through this one, up and down, kind of through the ringer. I'm going to let this thing settle back out. I think there is far too much on this price to sales, far too much on this PEG ratio. We've got EPS coming down. I'm going to, let some of those numbers kind of settle in on the next quarter, next 2 quarters. I'm going to see where this thing is. There's so much to be concerned about with all the FUD that's out there, the fear, uncertainty, and doubt. We've got a lot of different problems with tariffs, with politics, with knowing which end is up for me to go ahead and buy into this thing at such a high valuation. I don't know that anything with a high valuation like this is something that is really so convincing for me to right now to go ahead and buy it. A lot of people are running to those safety stocks, right? Dividend names, or even those stable tech names. I'm looking at Apple, and even some of those Apple and Mag 7 names could be purchased here before I would buy a CrowdStrike. So CRWD, I think that we are more realistically valuated than where we were, or valued, sorry. And just simply not something I want to buy just yet. So I like the fact that it's come back down to earth from where it was, but with a little bit more news and things that are going on, I just simply don't want to add to it yet. Trailing PE is super rich at a 679. The 5-year average is 100. And the S&P is over here saying, hey, buy me. I'm at 27. Why would you pay that much for this stock? Granted, that's trailing. I understand that's in the rearview mirror at this point, but 87 still about, 4 times over what the S&P 500 index average is. All right, so moving on. What else are we looking at? Let's get back to another name that I am paying attention to, and that one is going to be Eli Lilly. The ticker is LLY. And this one has come back down, right? We were looking at this one. This is back in August at a 972. If we look at the 1 month, we got up there like 930. Let's call it that, 930. So now we've come back down a little bit. If I look at why is this coming down? I said before that pharmaceutical stocks seem to be a good spot to hide out right now. Bank stocks, consumer goods, they are in a good area of if they're locally produced, and you got to have them. I think that could be a better way to play the stock market right now than high growth, high risk. I don't necessarily want to go and chase those. But as I'm looking at this, I did a little bit of reading here for us. And what's considered excellent revenue growth depends on the industry. I just said that CrowdStrike is, getting punished because their revenue growth is good, but not great for the industry and not what the analysts were looking for. So now when we're looking at a pharmaceutical company, we've got a market cap above 50 billion. Year over year, top line increases, high single digit percentages are already pretty strong. With that in mind, consider that Eli Lilly's revenue growth has not dipped below 20% since mid-2023. So they are continuing to grow revenue. They are trading off on what I believe is a vaccine study from the CDC, where they are going to be looking at the link between vaccines and autism. They're looking at those two, right? I believe Trump said something along the lines of it used to be 1 in 10,000 kids were affected with autism. and now it is 1 in 36. I don't know if we just did not diagnose it before, if it is overdiagnosed now. I'm not too sure what that tie is there, but there is definitely a big difference in those numbers, right? So they're looking at, is there a tie? Kennedy's going to be kind of diving into this to see if there is a link. A lot of the pharmaceutical companies say that it's been debunked already. Why are we digging this back up? But, if you've watched any documentaries on anything medicine related, you know that there's a lot of greed out there. So I don't know who to believe here. So I'd like to see what the findings are, see if all the vaccines are doing what they say they are without the side effects. I'm not too sure how that goes. But for me, at least here at this point in time, I feel a lot more comfortable buying Eli Lilly at some of the numbers that they are looking at versus where a CrowdStrike might be at this point. So I'm going to go ahead and share this Refinitiv one as well. And it's still rich, right? We've got a company that has grown about 545% in 5 years. They are doing more with, I just looked at this. Let me go ahead. We've got, I'm not even going to say the name of it. I'm not too sure. Yeah. All right. It's going to be delivering high rates of hair regrowth for adolescents with severe alopecia. We got that coming out. We've got another plan here for some other drugs that are coming out. I think it was called Ebglyss. I'm probably going to botch half of these drug names. I am not in that world. Single monthly maintenance injection achieved completely clear skin at 3 years in half of patients with moderate to severe atopic dermatitis. I got through that one, but Ebglyss is I can try to take a stab at that one, but the other one is baricitinib. I'm not too sure. Anyhow, let's get back to this article. So we're looking at Eli Lilly. I still like a lot of these pharmaceutical names. Even with the CDC getting into them, I do think that some of that could change, right? That would be a big, loss of revenue for a lot of these pharmaceutical names, cutting off that vaccine pipeline or at least limiting. Or if we kind of normalize the fact that some people are going to be anti-vax. I probably was never there. More and more I read into some things. I'm like, why are we injecting these different things in, infants that they might not even be exposed to for 15, 20, 30 years or whatever that time frame is. They could get that later in life, but it is what it is. I know that a lot of the vaccine mandates and things that happened earlier in time are still on the books. So I'm not too sure which one is the right way to go. I'm not 100%. So I would like to see what the science actually says. Price target around 11% of upside here. This was at 912 and the stock price is currently at 870. So those numbers have been skewed a little bit as well. So we'll have to wait for those new reports to come out. We do have some nice revenue growth coming off of this September 24 quarter. And then we're going to kind of level off for the March and June quarters for 2025. And nice earnings per share growth for the year from 24 at $12.99. And then we look at 25 at $23 and 26 at $29. That is a huge earnings per share jump from 13 to 23 by the end of 2025. So that's what we're looking at there. Annual revenue, man, that is massive as well. 31% gains on revenue for 2025 and another 25% gains for 2026. So this is cumulative. This is 56% of revenue growth by the end of 2026. That's what we're looking at there. So we're at $45 billion. We're forecasted to get to about $70 billion of revenue, and those earnings per share are going to go up as well. Dividend growth. They are a stock that is looking to pay out more in dividends. So yes, the current dividend at a 0.7% yield is low, but double-digit gainer on that dividend growth number. So if they were paying $1, now they're going to pay $1.15. That's what we're looking at there. Going forward, a bit of a premium. Now, this is also with that stock price in the low 900s, and now we're sitting around 870. We've got price to sales is high. Forward PE is pretty much right in line with their 5-year, but again, still rich. I will say that, right? Compared to the S&P 500, it is rich, but when it is rich, we are looking at a stock that we are getting good value on, right? We are paying less for this growth that we noted up top, actually down here in that PEG ratio, right? So the price earnings multiple, while it might be, this is the forward, right? So the forward number divided by the growth rate. So that growth rate is going to be significantly higher than this forward PE and bring this PEG ratio down to 0.9. So I think we're going to be comfortable buying this one here at this valuation, given that the PEG ratio is so low. We are paying less for the amount of growth that Eli Lilly is able to churn out. So yes, a little bit of uncertainty as to what happens around vaccines. Yes, we do have some other drugs coming onto the market that should be strong pipeline. There is going to be that tariff risk around a lot of these companies when they are, exporting or importing, going to different countries right now. We aren't too sure what that means. But compared to CrowdStrike with such a high valuation, EPS coming down versus where the analysts were looking, I think there's going to be a downtrend, and maybe we kind of retest some of those low levels that we had after the big failure with the internet breach everywhere that they had, or the outage, right? So for me right now, I would much consider Eli Lilly versus CrowdStrike. Both of them are a bit in the news this week with some of the big swings that they've had. But that is what I'm looking at between these two. So Eli Lilly at 870. That one could be the one for us this week. I'm going to take a look at our watch list and see just what we got going on here. So if I look at the change on Friday, Costco, big drop there. Eli Lilly at 4.73%, and Palantir, that was a big up. Palantir, they did release 2 of their Titan stations to the U.S. military. I'm guessing we're going to see that as part of this gain here. AI-powered mobile battlefield stations to U.S. Army, right? So I just said that, and that is a part of a $178 million contract. And yeah, guys, I did say that this one at that kind of valuation was something that I was going to start nibbling at in that mid 80s, and we're there. So I've been buying a couple shares. I haven't been going too crazy, but I do think that Palantir on this drop and with the revenue growth and the gains that they've had, I feel a lot more comfortable in the mid 80s versus at that 120, 125. They also peaked out on my birthday too. That happens, and then they all fall off. I guess that's just how it goes. But anyhow, we got that going. I do believe that Palantir is looking pretty strong. We've got Bitcoin trending down. Let me go ahead and take a look. I'm going to pull up crypto.com. I do have links in the description to help get you started. I'm going to pull up my my crypto.com account and just see where Bitcoin is at. I know Ethereum dropped sub 2,000. ETH is sitting at 2,070, and Bitcoin is sitting at 83.6. So again, Bitcoin, I'd rather buy that one right now. I feel like that's the big dog on the porch, and that's where I want to kind of park some money. I feel like, again, a lot of unknowns around what's going to happen for other cryptos. But for me, Bitcoin at 83 starts to feel a little bit more comfortable. I know it's a lot of money, but I do think that with the U.S. building a strategic crypto or Bitcoin reserve, that should help us. Again, there's just so much fear right now that it really makes it hard to get a footing for what's going to happen with this market. I did mention that a lot of the Mag 7 should start to trend up. I did want to take a look at a couple of those real quick. Amazon trended down also, right? We had it at 242. And now we are sitting sub 200. So I can start to make the argument for starting to buy some of these large mega caps as these valuations come back down to earth. So Amazon's come down, what, probably 15, 16%, something like that. And my back of the napkin math might not be mathing right now. But we got Microsoft from 468 down to 392 in extended hours. So again, another stock that is massive, that is fairly valued, might be a little bit rich on the trailing, but forward's probably a little bit cheaper there. That's starting to make more sense to me. Meta, that I've been saying could be bought. I probably said it now near the 700 number. I think it's getting more attractive at some of these numbers. I think a lot of people are just tossing out these stocks, and I want to be buying some of them, right? I definitely think that this pain is going to be hopefully somewhat temporary. I really do believe that the market's going to get its footing. We're going to start to see that us, as well as other nations, are going to be spending money on these platforms. We're still going to be advertising on Meta. We're still going to be watching YouTube and watching all those ads. I don't really think that that changes, right? So I don't know that tariffs are going to really change the YouTube spend. I don't know that anyone's going to get off of Meta completely, regardless of what's going on in politics or anything else. So one that I am a little bit nervous about is going to be Tesla. I know that we got rid of ours, not related to the whole Elon thing. I don't really understand all the hate that's being thrown that way. I'm still on a lot of those Tesla pages, and people vandalizing cars that are just randomly in a parking lot over the fact that they don't like who's maybe at the helm of Tesla. I think it's just absolutely just ridiculous. I saw one yesterday where someone was in Virginia, and some woman with her daughter just walked up, keyed the car, and just walked off. And that was simply just vandalism in a parking lot as this guy was out at breakfast. Again, there's just a lot of ridiculous behaviors that are out there. I don't really know that people are going to be rushing out to buy Teslas. I've seen a lot of people badging them with other badges, so people might not think it's a Tesla in traffic or anything. I'm not even too sure why or what the hate is around it, but I think there's a lot of anti-Elon judgment right now. So I don't necessarily know where Tesla goes from here. I know we have a lot of the robotics, the quantum, the everything coming out. I really want to think that Tesla is going to go up in the long term. I think that Elon being associated with Trump is a big negative for the left-leaning crowd, which is heavily, the Tesla buyer. And I don't know where this goes from here. So I might start nibbling, but I do want you to be aware that just because it's on a dip, it might have more to go with everything that is going on negative out there. That's what's up with Tesla, and they actually have a lot of upside, considering what the analysts are saying right now. So 32%. Did we look at that for CrowdStrike or CrowdStrike? We're sitting at 26. Eli Lilly, we are probably less, I would imagine, but 18. Yeah, that's okay. I'm still fine with comfortable name like Eli Lilly and 18% of a potential upside there. Walgreens. Let's take a look at WBA. They have agreed to a deal to go private, I do believe. Let's take a look here. We got investors have opportunity to lead them, and I just saw it on another article here. Let's see if we can't get back to it. If we got a lot of different things here about shareholders, shareholder alert, class action filed. A lot of people are really upset that Walgreens is going private. I think that had to be the reason for this 7.5% gain. Let me see if I can't pull something up, guys. I hate when I say something and then I can't find the actual article. So Walgreens rises amid a $10 billion deal with Sycamore Partners. Let's take a look at this one. I'm going to share this one from Yahoo. We've got, Walgreens rises amid $10 billion deal with Sycamore, just what I just said, to take them private. They finalized a $10 billion deal worth as much as $23.7 billion with Sycamore Partners to go private after 4 months of negotiations. And that is why they jumped over 7% Friday. I think I just guessed that one. So, yeah, this is, a lot of people were really leaning into this one for the dividend, right? I knew there were some other YouTubers, one being Jeremy Lefevre. I forget how to say his last name. I think he had $1 million worth of Walgreens Boots Alliance. And I believe it was at a 4% yield at that point. And then the dividend, I believe, got cut. He was banking about $40,000 a year on this stock, and it was just tried and true. It was on the market for 100 years. It was a dividend aristocrat. It had so many things going for it. But, man, the death of the drugstore is so real with this that it is, kind of wiping them out. The whole Rite Aid thing, and then selling off the Boots business in Europe. Man, it was just so many pain points for them. CVS is struggling to stay. Amazon's trying to close in on some of that business. I do want to look at CVS now that I say that. But, this one is, it was definitely in the crosshairs, and one that isn't going to be standing the test of time as a public company. So CVS did go up. Let's go ahead and share this one as well. We got 1.6% up on Friday, 4% dividend yielder. Now, maybe we have a little bit less competition out there. I'm not too sure what the future of Walgreens looks like. Only about 8% of upside. I don't really want to dive into buying any more, pharmaceutical box store retail locations. I really don't want to have anything to do with it. I'd rather buy Costco. To be honest, that you get pharmacy, you get everything, rather than a lot of overpriced items at a Walgreens or a CVS, rather than the fact of just having pharmaceuticals. Costco, about 14% of upside, but I do want to see why this thing went down 6% on Friday. I don't have that answer yet. Tariff uncertainty. Costco revenue. They did report. There we go. All right. We got revenue momentum remained strong despite a fiscal second quarter earnings miss, as the warehouse chain delivered another standout performance with U.S. comparable sales growth in February from UBS. We got company grew its comparable sales by 8.6% year over year in February. Retailer sector saw soft trends amid adverse weather and weak consumer confidence. So, I guess the consumer is getting hit. They reported revenue of $63.7 billion for the 12 weeks ended Feb 16, up from $58.44 billion a year earlier. So, up over $5 billion in revenue in a year. They were looking for 63.1, so we outpaced there. Earnings increased to 4.02 from 3.92 a year earlier, so gains there, but a little bit light. We were looking for a little bit more, around $4.11. Foreign exchange negatively impacted the translation of international earnings to U.S. dollars by 13 cents per share, their CFO says. We've got a couple different things that didn't go so well for them based on foreign exchange. Revenue's growing, a little bit less uncertainty out there with the consumer. I still think a lot of people are obviously shopping there. We're still spending money there, right? We had a $5 billion gain in revenue. I don't know. Maybe this could be one to buy on the dip. I like Costco right now, too. I think that I'm writing that one down. Costco, put a check mark there. I like Eli Lilly. I like Bitcoin. I think that is getting overlooked. And Mag 7, Palantir, I think that one could be bought. I'm staying away from Tesla. Again, I like the Mag 7. I don't want to throw Tesla into that one right now. I feel like that is just too risky, too much uncertainty as to what happens there. What happens with Elon? What happens with all those things? So while I still like the company, I might let this thing settle down. I might let the whole Doge thing kind of, I don't know, maybe settle down there. I'm not too sure even when this thing is going to happen. So could you buy now? Sure. Is it something I really want to dive into heavily? No. So that's what I got there. What I am looking at, let's get back to our watch list. Let's take a look here and see what's just going on. We got Meta. That one's still comfortable. Bank of America, I think they had a bit of a mixed week. Change since added. Tesla's gotten beat down the most. We kind of figured that. I was kind of saying that. NVIDIA. Oh, man, NVIDIA. I've seen some people saying that this thing could go to 85. I don't see that. I think there was a support level around 85. Probably, man, that is way back there. That is way back there. Could we get to like this 104? I mean, we have a double bottom there. 102. I'm trying to see exactly where this line is. Maybe, but I don't know that we're breaking that. I feel like NVIDIA could be purchased here. For me, it can. I know I bought some. We've definitely lost some on that market cap. I know we were much higher as far as that market cap was concerned. I'd be comfortable buying this thing now. Analysts agree with me heavily, 57% of upside. We've got new price targets this week at 185, 130, 163. Cantor Fitzgerald at 200, but that's end of February. Man, I don't know. Maybe I need to add NVIDIA to this shopping list and see if I can't buy some of those shares on the cheap. And I mean, I've told you guys before, that's probably one of my largest positions. But hey, if it's on sale and I have high conviction in that name, I want to add it. I'm still not shying away from AMD. I hope you guys don't think that is the case either. I added some of that to my IRA, I believe. And I think I told you when I was buying this at 120, if it got down to 95, I'd still be buying it, and I'm still buying it. 47% of upside there. Micron, let's take a quick check. Micron MU, we're sitting at 92.96, 47% of upside there. So a lot of these stocks are being thrown out with tariff talks, with everything that's going on out there in that world. And man, I just don't know that that is going to be a forever problem. I think that we've got some new tariffs going out this week. Trump doesn't rule out U.S. recession amid trade tariffs. I think we're going to try to tighten the screws down as good as we can. And then I think we're going to try to come to the table and make some sort of deal. Markets finally woke up to tariff reality. Is this a buying opportunity? Wall Street Journal, I'm not going to be able to get in that. I'm sure that's going to be behind a paywall. So I'm going to go back out of that one. But nonetheless, I do think that a lot of these stocks start to come back down as the market really digests what's going on out there, as things start to really take shape as far as what the tariff talks mean, what rates are going to do. Are we going to end up in a recession? What is the long-term effects of this thing? So we did dip into correction territory in a couple different areas, and it could get worse. But at that same time, I think some of these stocks have come down so much that it does make sense for me to start buying them. Other ones that are in that high growth crosshair, man, that's tough. If you're high growth and you're affected by tariffs and rates, man, you got a lot of targets on your back, if you will. And I don't know that I want to be there. So I'm still looking pharmaceutical. I'm still looking financials, some consumer goods, consumer staples, and I do think Costco makes up that group. Yes, there is some consumer discretionary there, but there is a lot of staples that people have to have, and I think that could be a strong trend going forward as well. Mag 7, Sands, Tesla, I don't know that I want to be in that one. Palantir, I could nibble a couple shares more. I probably will. Walgreens, that's out. I'm not, we're not going into private equity on that. I would have a lot of other places to put my money before doing that. Yeah, I think that's pretty much it, guys. We covered CrowdStrike. That one is making a little bit more sense, but I want to wait for that one to come back down to earth a little bit more before we touch that one. And yeah, that's what I got. And, still SoFi. I do want to add some more SoFi. I think that is a growth stock that has a lot of things going well for it. And you're in the financial, you're in fintech. It's got a lot of growth drivers behind it. I'm looking at it right now. It's about 13.6% of upside. That one could probably come down a little bit more for me to feel a little bit more comfortable buying that one. But it is something that I believe is on the uptrend. And with Trump in office and student loan forgiveness kind of getting thrown out the window, I do believe that could have some more upside going forward. So hopefully that helps. Hopefully that gives you a little bit of direction as to some things to look at to do your own homework, right? I did mine. You turn in your homework. You let me know what you're buying. Please feel free to share your thoughts on Let It Grow Investing on Facebook. I do have links in the description for crypto.com, for Webull, for E-Trade, and for Binance. So if you're looking to get started, please use my links, and I would definitely appreciate that as well. So thank you very much for stopping by. I will catch you guys in the next one, and take care.